Lesson number 15, Basics of Goods and Services Tax. So earlier you understood why the old taxes were subsumed into GST and why GST was brought about and everything. And now you're actually setting your foot into learning what GST really is and what the provisions of GST law talks about. So this chapter is going to be a general framework. This is going to give you a bird's eye view of all the chapters that you're going to study ahead. So for that reason, this is going to be really important to get your foundation right, and also significant amount of marks is going to be tested from this chapter. Like we've said earlier, this is a revision class and my motive is to help you quickly revise the syllabus one day before the exams. Alright, so please open your textbooks and get your colored highlighters and pens, so whatever we have marked. So in this I have again marked whatever is most important and what needs to capture your attention. Alright, so first, do we begin? Yeah? Alright, everybody's charged up. Very good. So now as I said, first we are going to be talking about what is the meaning of GST. GST, Goods and Services Tax, correct? So GST is a destination based tax on consumption of goods and services. I'll explain this to you. Have you ever wondered who actually bears the burden of GST? I'll explain this. Let's say this is supplier 1 and this is supplier 2 and this is the customer. You know that in the value of chain of goods, the goods will move from the manufacturer to the wholesaler to the retailer and then moves to the customer, right? Who is the actual person who really bears the burden of GST? It is the consumer, because let's say this is supplier 1, he bought the goods at 100, he sold this to supplier 2 at 120 and then he's selling this to the customer at 150. Alright, so the customer is going to bear the whole price of 150, and all these people who might have paid GST earlier, right, they will take credit of the taxes. Yes, no need to panic. We are going to be talking in detail when we study the chapter ITC and also further little in this chapter. So first what we're talking about is, it is a destination based tax. In the sense, let's say I sold some goods from Karnataka to Tamil Nadu. Okay, so the one who is in the destination, who is the customer who's sitting in the destination? It's in Tamil Nadu, right? Destination based tax. And consumption of goods and services, who is the one consuming the goods? Is it the retailer? Is it the wholesaler? No, the consumption is made by the customer, right? Whoever is the customer and one in the last of the value chain is going to be bearing the burden of GST. Alright, we are going to be understanding this very clearly once we look into provisions specifically. That is one. Then, like I said earlier, it is levied at all stages, right from the manufacture to the final consumption. So manufacture happens here, moves to the wholesaler, moves to the retailer, and then moves to the customer, right? So at every point, at manufacture, wholesaler, retailer, and to the customer, at every point the GST is levied. Alright, now only value addition will be taxed and burden of tax is to be borne by the final consumer. Like I said, it is a consumption based tax. As I explained earlier, let's say if GST is levied on every stage, alright, let's just take a simple example. So what did we study here? It is levied at all stages. Let's say 5% GST is levied at all stages and the cost of the product is 100. So if it is 105, alright, 100 plus 5%. Now again this is 105 plus 5%. Then this is, let's say this plus 5%, and then again this plus 5%. Don't you think GST is getting levied at 5, 3 times, isn't it? Is that the motive of GST? No. So whoever pays taxes, right, whoever pays taxes is going to claim the credit of this 5 rupees GST that they have paid earlier. Only the one who is going to actually consume the goods is going to bear the whole cost of GST. So this we will understand in detail as we move further. again. With the advent of GST, we've already seen in our previous chapter, it has been subsumed. We know that there were a lot of taxes like CST, VAT, entertainment tax, luxury tax, etc., 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 which have become one tax, one nation now, that is GST, right? Okay. Now, continuous chain of tax credits. Here, when I explained in this, the wholesaler will take the credit, in the sense whatever GST he paid to the manufacturer, he is going to claim the credit. It means he is not going to bear the burden of paying GST. Again, this retailer, whatever he paid as GST to the wholesaler, he is going to take the credit and set it off against the output tax that he is going to pay. Whoa, I understand. Output tax, credit, input tax, credit. There's a lot of big terms for you right now. We will slowly understand this step by step when we move further. Okay, so just understand that anybody in the middle of the value chain is not going to be bearing GST. Only the one in the consumption, only the one person who's going to stand on the consumption side is going to be bearing all the burden of GST, right? Now here, like we've spoken about, continuous chain of tax credits. Whoever has paid, they will take credit, in the sense they will, let's say, if they have to pay output tax of 100 rupees and they have paid earlier, they have paid GST earlier in the older chain of 60 rupees, they're going to deduct this and they're going to pay only 40 rupees to the government. So this is as simple as it can get. What is dual model of GST? So both the state government and the central government both have the powers to levy GST. Now let's say if only central government had the power to levy GST, where should the state governments go, right? So even the state governments, indirect taxes are a very big part of the exchequer of the state governments as well as the central governments. So both of them have, restricted, both of them have held that power to levy GST. Okay, so whenever you see a bill, I'm sure you would have seen a bill, any bill, let's say a restaurant bill, right? So you have eaten something worth 1,000 rupees and let's say they are levying a tax of around 12%. And do you see CGST 6%, SGST 6%, right? And then here comes your invoice, 1,000 plus 6% plus 6%, and here comes your invoice, right? Have you seen this? What is a CGST and SGST? It's like when you're having lunch or dinner at a restaurant, even the state government is having with you and even the central government is having with you, right? So you're paying taxes to the government and both of them will collect their own share of taxes. Okay, yeah. So moving ahead, what is this compensation to states? Now, I briefly mentioned to you that under GST, the states also have the power to levy GST. But why should the compensation be given to states, right? Let us understand that earlier, every state used to levy multiple taxes to their consumers. And meanwhile, their earning was way higher. So they were quite worried. What will happen to us if we agree to joining to GST? What if our revenues come down, right? So most of the states would suffer a revenue hit to their accounts. So that is why the central government said, don't worry states, we are there with you. Whatever revenue hit that you're getting, right? Whatever the difference, in the sense, whatever you were earning earlier and whatever you're going to earn in the new GST regime, if you are earning lesser than that, the difference portion we are going to give you as compensation for 5 years. Understood? For 5 years we are going to compensate you, but we're not going to compensate it for forever. Please carefully listen to me when I tell you about every line, because all these are your MCQ points, all these are your exam test points. Compensation says for how many years? 5, 7, 8, 10. They're going to give you options like this, right? So your exam is going to be really pretty simple, but all you have to do is gear up, put on your earphones, give me all your energy and listen to me, and keep your textbooks open. Okay, keep your textbooks open. And I know you can do this even while walking, running, or eating a food, or while commuting. This is something that you can do. Just put on your earphones and keep listening, right? So this is a passive way of learning, you know that. Okay, so briefly we've touched upon what is compensation to states. We'll study a bigger paragraph in the later part of the chapter. Now, What is GSTN? Goods and Services Tax Network. Have you seen the GST website? How do you think you're going to file returns, right? How do you think you're going to file returns? How do you think you're going to pay taxes to the government? How do you think you're going to get registration under GST? Do you think you're going to go to the GST office and do all this? No. Everything has become online now, right? Correct. So this is your GST network. This is your Goods and Services Tax website. So see here, if you see, you can take what can we do here? What all can we do? We can take registration under GST. Can we see the ledgers here? The whatever ledgers you can maintain. Then this is your returns, every type of return that you're supposed to do, and this is your payment. Whatever you're supposed to pay to the government, you'll pay here. User services, let's say you've got any notices or orders, or there is something that you want, you can do here. You can take your refunds from here. You can do your e-way bill. So this whole whatever I'm showing you, right, all this is your GST website. By whom is this managed? This is managed by Goods and Services Tax Network, commonly known as the GSTN. So what is your GSTN going to be doing? I showed you just now that it will do your registration, returns, and it will throw out some MIS reports like for the entire year, how much GST have you paid, how much turnover have you made, right? Then profile, again see, it'll show the taxpayer's profile. Again see here, this is your profile, this is your dashboard. It'll show how much is your liability, what is pending, and can you see here turnover details? So this is the profile. It'll show whatever, everything, every detail about the registered person. Now it's going to match ITC. You just can't say I've paid 60 rupees earlier, so give me 60 rupees, right? So the system is going to match ITC whether you've really paid so much ITC whether you've really paid input taxes earlier. Okay, so all this will come to later part. So now what we have to understand is GSTN. What will it do? One is I've just put out a very simple thing for you. It does RPM, R for registration, returns and reports, P for profile, and it handles your payments, and payment means settlement or IGST as well. M for matching, and M for matching, what is it? Matching the input tax credit, matching whatever payments that you're supposed to make to the government. Cool? Yeah. Now what is GST model? GST model, what did I just say? Both the central government and the state government have the power to levy GST simultaneously. All right. So whenever you're going to be any transaction will have both the central taxes and the state taxes. You can't exclude one from the other. So see here, and that's equally divided. Like I said, 12% means half, equal share. 6% center will take, 6% states will take. Understood? Now consists of the following acts. Now, so GST law consists of these following acts. What is this? CGST, Central Goods and Services Tax, State Goods and Services Tax, Integrated Goods and Services Tax. Central Goods and Services this is the CGST, right? Okay, this is levied by whom? Tell me. By the center, of course. State by the respective states. Karnataka state will have its own SGST Act. Tamil Nadu will have its own SGST Act, and Delhi will have its own SGST Act. So every state will have its own state goods and services tax. Integrated goods and services tax, this comes when you're doing interstate supply, in the sense what is not within my own state is your interstate sales, and when you do interstate sales, integrated goods and services tax will be levied. Union territory goods and services tax, because union territory is not a state. Do you agree with me? Puducherry is not a state, so Puducherry will have Union Territory Goods and Services Tax. One more, again, this is the Compensation to States Act, which talks about the compensation that is supposed to be paid to the respective states, in what manner, how much, for how many years, and who's going to do the audit. We are going to be studying that in detail a little further in the chapter. Okay, so these are the 5 acts. So now you see, who has the power to make laws? The Parliament. The Parliament and the Parliament alone has the power to make laws. Okay. mark it. Whatever I circle, whatever I've highlighted, please highlight this. So one day before the exam, either you're listening to this lecture or you're studying, you will at least not miss out on the most important key points that you are supposed to really see and go for the exam. Okay, now again there is a lot of repetition in this chapter, so it looks big, but it is not. Okay, once you understand what the meaning is and what they're actually trying to say, and once you understand the foundation, it remains the same. Okay, now again they're telling you it is destination based tax. Who is going to levy what? Obviously central goods and services tax will be levied by CG, central government, states, union territory by the respective union territories, right? So now what is IGST, guys? IGST for interstate supply. What is interstate supply? Can anybody tell me what is interstate supply? So right now you're in Kerala. Okay, now you sold to Andhra Pradesh. What is this? Is this within the state? No, right? This is not within the state. So this is beyond the territories of the state, and hence IGST will be levied. That is your integrated goods and services tax. Now don't ask me whether integrated goods and services will consist of CGST and SGST. Yes, most likely yes, because see, if this is 18%, IGST will be whole. If it's CGST, SGST, it will be 9%. Okay, got it? IGST is only one rate. Okay, when it is supplied to the state that is beyond the territories of your state. Now can we see here, it is under interstate goods and services. Again, whatever IGST you paid will be available as set off. Please understand that the whole whatever is applicable to CGST is applicable to SGST, IGST. Mutatis mutandis application, all the provisions apply in the same manner to all the respective acts. If they're saying you can take credit under IGST, it means you can take credit under CGST and SGST also. The respective provisions will be applicable mutatis mutandis. It means in the same manner. Okay, so if you learn any one act, whatever we are going to be studying further, it means it is the same application for all the other acts as well. Okay, now again we are talking about what is intra, when that is within the state, within Karnataka, let's say. So when you're talking of within Karnataka, we said both the center and the state will come and have food with you, right? So they both are going to take their own share of taxes. Then intra union territory means within the union territory, that is, let's say within Puducherry. If you're selling, you're a registered person in Puducherry and you're selling within Puducherry, then central also will come instead of the state, because Puducherry is not a state, it's a union territory. So union territory tax will be applicable. Now interstate or import or SEZ. What is interstate, guys? I told you interstate is something that's beyond the state, right? Or if you're doing any import, okay, import is when you purchase something that is outside the territory of India, that is beyond the country. SEZ is special economic zones. So there are certain places which has been notified as special economic zones. If at all you purchase something from that particular special economic zone, also it will be considered as what? Interstate supply. Okay, so now let's say there are a lot of special economic zones in Gujarat, example. Okay, so this is a state, right? And the supplier is actually from Gujarat, but he purchased from special economic zone of which is actually in Gujarat only. So is this a intrastate supply or an interstate supply? Guys, think about it. What are we talking about? Whatever you purchase from any SEZ will be an interstate supply. So in this case, can we agree that this is an interstate supply, even though these two places are the same? Though it is in Gujarat, but this qualifies as an SEZ, hence it is an interstate supply. Cool? Yeah? Okay. Now we are saying IGST is applicable all over India, including state of Jammu and Kashmir. Why leave Jammu and Kashmir? Even that is included. Okay. Now, I told you IGST rate will be equal of CGST and SGST rate. So just that it will be one rate. So if this is 18%, this will be 9% and 9%. So now what are the rates of GST? Yeah, 5%, 12%, 18% and 28% are the applicable rates. that is existent right now under the current GST regime. Cross utilization of credit, when I said earlier, can we take a moment and understand what credit really means, right? So let me give you a very simple example. Okay, so this is wholesaler, now this is retailer, this is customer, right? Okay, so now let's say the wholesaler purchased the goods at 100 rupees. Now he sells this at, let's say, 150 rupees. Now plus GST. Okay, GST of how much? 5%. Can we talk about 5%? Yes. So what is 5% of 150? 7.5. Yeah. So what is the cost of the goods? Sorry, 162.5, right? So this is 162.5. This is what happens when you get too used to a calculator, right? Correct. Okay, so the 7.5 what the retailer has paid earlier, he is going to claim credit. Now let's say this fellow sold to the customer at 200 rupees. Okay, 50 rupees is his value addition. Do you agree? Yeah. So on 200 rupees, if it is 5% GST, he has to pay 10 rupees, right? He has to pay 10 rupees as GST. 200 plus 10, this is your 210. This is your actual invoice amount. So 10 rupees is the GST amount that he has to pay. Now what has he paid earlier? What has he paid earlier to the wholesaler? 7.5. So whatever you paid earlier, you can take credit, you can claim and set it off against the output tax that you are going to pay to the government. That is your credit. We will discuss this in detail in further, like I've always told you. For now, just understand that whatever you paid earlier and whatever you're supposed to pay on the sales that you make, you can claim a set off, and that is called your credit. So input tax credit means, what is your input? Input is the purchases that you make. What is the tax? The tax that you pay on the input. What is the credit? Input tax credit. Credit of the input taxes that you have paid earlier on the inputs. Are we clear? Okay. Now we are saying, what is the nature of supply? Again, they're saying there are two types of supplies. It could be intrastate or interstate, within the state or outside the state, or within the union territory or outside the union territory. Okay. Now here they are going to be defining what all constitutes interstate supply and what all constitutes intrastate supply. We've seen earlier, whatever is beyond your state is interstate supply, and whatever is beyond the country is also interstate supply, and whatever import is also interstate supply, and any SEZ also is your interstate supply. Are we good here? So that is outside your state, one, then imports and SEZ. All of this will constitute what? Your interstate supply. Cool? Correct. Now whatever is within your state, okay, whatever is within your state will be your intrastate supply. And why do we need to determine whether it's an interstate supply or intrastate supply? Tell me. Yeah. Why do we need to know whether it's interstate? Because depending on this, you will charge CGST, SGST or IGST. If it is an interstate supply, you will charge IGST. If it is an intrastate supply, you are going to be charging CGST plus SGST. Are we good? Yeah. Okay. Now same. I told you there's a lot of repetition in your chapter. Now same, instead of going through all of this, you can just go through this table. Okay, you need to put your own symbols, whatever you want to do. You can say last day revision, you can put marks, you can put note, stick notes, you can put stars. That means last day before the examination you have to see only those topics, whatever you've highlighted and whatever you put your stars to. Okay, the next section that we're moving on to is section 9, supply in territorial waters. What is territorial waters? So this is India map. Okay, and whatever is the waters here is the territorial waters in very simple words. Okay, so if there is a supply from the territorial waters, if there's a supply here, and if there's any supply here, which state, what will be the place of supply is what we're going to be talking here. Okay, so if the location of the supplier is in the territorial waters, okay, let's say the location of the supplier is here. Okay, location of the supplier is here, and where the place of supply is in territorial waters, what will be the, see, this is not a part of India, right? Of course it's a part of India until 12 nautical miles and etc., but which is the state that you're going to consider? So the closest coastal line will be the place of supply. So what are we saying here? So the place of supply will be deemed to be the coastal state or union territory where the nearest point of appropriate baseline is located. So let's say the nearest baseline is in Kerala. So if this supplier makes any supply of GST from this point, whatever is the nearest coastline will be considered as the place of supply. As simple as that. So then in questions they will give you, so the nearest coastline was Vizag, or the nearest coastline was Kerala. He supplied from let's say the territorial waters. So what will be the place of supply? So whatever is the nearest coastline, that will be your place of supply. Okay, now let's say example, suppose there is a supply from territorial waters where the supplier is located and the nearest baseline is Kandla. So place of supply will be in Gujarat. Now next, what are they saying? Some goods were supplied to a fishing trawler located in the territorial waters near Yanam. Okay, a part of the union territory of Puducherry. So this Yanam is close to Puducherry. Since the nearest baseline is Yanam, which will be the place of supply, the place of supply will be the union territory of Puducherry. Correct? We understood that if at all, let's say this is Puducherry and the nearest baseline is Yanam here. Okay, so what are they saying? Whatever is the nearest coastline, that will be the place of supply. Understood, right? So now we also spoke. Now if the supplier is registered in Puducherry itself, let's say he is a registered person of Puducherry, then what will since he is registered in Puducherry and then he is supplying, the place of supply also will be to Puducherry. Wait, cancel. Okay, to Pondicherry. Puducherry is Pondicherry. Okay, since these both are in the same union territory, UTGST and CGST will be applicable. Let's say the supplier was from Tamil Nadu and the place of supply is Puducherry, then it will be interstate supply. We are clear on this, right? Okay, so this is the point that they are trying to make here. Now again the same, what is interstate supply? Between two states, between two territories and one state and the one union territory. Again between, let's say again Tamil Nadu and Puducherry, then it will be interstate supply. So whatever is not within your state is a interstate supply, right? Okay, so they're going to be repeating this all throughout the chapter and I really hope we are clear on this. Now again they're telling us SEZ is a part of the interstate supply. SEZ is the special economic zone. So what all constitute interstate supply? Here, supplies to international tourists will also be considered as interstate supply. If at all you're selling something to an international tourist who's just come here for a brief period of time, so he'll be considered as an international tourist and it will be considered as an interstate supply. What all will be interstate supply? From one state to another, we know. Again, import of goods till they cross custom frontiers, then import of services, then if it's any export, then services to and by SEZ. Do you understand this meaning when they say to and by? Even if you're selling to or if you're purchasing from an SEZ, it will be an interstate supply. Supplies to international tourists and any other which is not intrastate. Whatever is not intrastate will be interstate. Alright? Okay. Now, what is intrastate? Within the state only. We know that. Now, here they are just giving an example. Let's say the location of the supplier. Okay, do we read this? A company secretary registered in Maharashtra for the past 5 years. So where is his registration taken? Registration is in Maharashtra. Okay. Now, and he goes to Delhi for some as a visiting faculty for a summer course at a reputed college. Okay, he goes there and gives service. So this is the place of supply of service. Now, is this a interstate supply or an intrastate supply? He is supplying service to another state. So the location of the supplier, this is the location of the supplier, where the supplier is actually located, and where is the supply that's actually being given? That is Delhi. So it is the interstate supply. All right. Now, this is like a summary chart, very important. You can skip all the above text content and just read the summary chart. It will be very simple. Again, one state to another, one state to another union territory, one union territory to another union territory. For all this, it's an interstate supply. Within the same union territory, within the same state, it is an intrastate supply. We've already discussed this many times now. Now, in the definitions, I feel this is important. What is export? What constitutes export? So you will need to know this to understand something that comes ahead in one of the chapters. So what is export? The supplier is in India. So I am supplying, I am exporting, let's say some clothing I am exporting. So I am in India, I am located in Karnataka. Then the recipient, somebody else, okay, he is located in America. So in the US, so I am supplying from India to the US. So US is outside, right? The recipient, the one who's collecting, the one who's buying my goods is in the US, outside India. And then payment, how is he paying me? In convertible foreign exchange. He's paying me in dollars. Cool. He's paying me in dollars. So I'm receiving the payment in convertible foreign exchange, or wherever permitted by RBI, you can collect in Indian rupees also if it is permitted by RBI. But generally, you should receive whatever you export in convertible foreign exchange, that is in the home currency of that particular country. Now, and the supplier of service and the recipient of service are not merely establishments of a distinct person. In the sense, distinct person we will understand in the chapter registration. What is a distinct person? Let's say I am owning this clothing business. Even in America, even in the US, I have one business unit there in the US. So if at all I am supplying from India to my business unit in the US, then I am basically supplying to the same person because it is my own business, right? So that will not constitute export. If I am supplying to a person who is not related to me, okay, who is a distinct person? Somebody who is related to you. Maybe you're related in the sense, not just relatives, another business of your own, but set up in a different place. In very simple words, we'll get to the mechanics of it in the later part of the syllabus. So, what are they saying? The supplier is going to be in India, the recipient is going to be outside the state, and also I'm going to receive in convertible foreign exchange. And what else? What else? It is not a establishment of mere distinct person. It means it should not be my own establishment. It should be an independent party. Okay. Yeah. Now what is import? Whatever you import, that is, the supplier is located outside and then the recipient is located in India. Correct? Okay. So you can do away with all this. It's not as important. We can come to UTGST. Okay, so we spoke about what is IGST. IGST is an interstate supply of goods and services. What is UTGST? UTGST is applicable to Union Territories of India, right? So what are the Union Territories of India? Can we come here? So I have just made one small mnemonic for you. Union Territories of India are Dal Chawal, D for Daman Diu, and Dadra and Nagar Haveli, D. A for Andaman and Nicobar Islands, A. L for Lakshadweep and L for Ladakh, L for Lakshadweep and L for Ladakh. C is for Chandigarh. Okay, so all these are 5. You need to remember this because let's say in any question they give you Ladakh, you have to choose the option of Union Territory, UTGST, not SGST or not SGST, right? So for that you need to remember. To remember, if you simply read and go, you will not remember. Correct? So you will not forget if you think that okay, Dal Chawal is for Union Territories. I know it might not make a direct correlation or a direct sense to this, but whatever works for you, please make mnemonics in that perspective. Whatever I feel I can make out of it, I will definitely help and make a few short forms out of it. Alright, now we know that Delhi, Puducherry and Jammu and Kashmir are union territories, but this act will not be applicable since they have their own state legislature and government. Oh, now do you understand? From so long I was going on telling you Puducherry is a union territory. I agree it is a union territory, but that union territory has its own legislature. In the sense, it has its own legislature. So that is why this UTGST will not be applicable to that particular state, okay, but rather it will be considered as a state and not a union territory. Are we clear? So if any one of the union territories have their own state legislatures, it will not be considered as a union territory for the purposes of this act. Hence SGST is applicable, okay, and not UTGST. Okay, yeah. Next, can we say, see again, Jammu and Kashmir and Union Territory of Ladakh. Jammu and Kashmir was split between Jammu and Kashmir and Ladakh. So Jammu and Kashmir has its own union territory. Hence, what will apply? Can you tell me what will apply here? Yeah, you're right. UTGST will not apply. State goods and services tax will apply. What about Ladakh? L comes in Dal, correct? L, Lakshadweep, Ladakh, right? So this will be considered as a union territory. Next, again same, what was given above. Now let's say there's a supply from Jammu and Kashmir to Ladakh. What will they apply? See here, Jammu and Kashmir will be considered as a state, right? And Ladakh will be considered as a union territory. So there's a movement of goods or services from one state to another union territory, or one union territory to another state. Hence this will be chargeable under IGST. Are we right? Yeah. Only if it is within the territory, it will be intrastate. If it is beyond the territory, that is beyond the territory of Jammu and Kashmir, it will be a what? Interstate, right? Okay. So this is what they're trying to tell you in the whole thing. Now, merger of Daman, Diu, Nagar Haveli. Daman, Diu, Dadra and Nagar Haveli was merged into one, and hence this will be considered as one single union territory. Now, all these are very simple things, but if you just go on reading it, you might think it's very complicated. So kindly please pay your attention. We're going to finish this quickly. Okay? Yeah. Now, administration and powers of officers. Here we're talking of all union territory UTGST powers, and all sections are related to UTGST only. Like I said earlier, whatever is applicable to UTGST is the same for state goods and services tax, same for IGST, same for CGST also. So if you know something here, it means the same will apply for all other acts as well. Now, can we say that what is the power of the officer? He can exercise any power that has been given to him. Okay. What is the authorization of officers as of central tax as proper officer in certain circumstances? So they're saying whoever is the officer appointed under CGST, will be authorized to act as officers under this act also, under UTGST also. So whoever is the CGST officer, the same officer can also act as the officer for UTGST also. Now, if at all any officer issues an order under the CGST, where any proper officer issues an order under this act means UTGST, okay? So we are currently talking about UTGST. Shall also issue an order under the Central Goods and Services Tax. So if there's an order under CGST, there has to be an order under UTGST and vice versa. Now, if there's any proceeding, what is a proceeding? Yeah, anything that the officer is asking for, to give any information or to submit or to pay taxes or to file returns, whatever it is. So that proceeding, if any CGST officer has initiated any proceeding, then that same proceeding the UTGST officer also cannot initiate. In the sense, two different officers cannot initiate the same proceedings on the same topic. Understood? If CGST officer has already initiated a proceeding, then a UTGST officer cannot again initiate that proceeding, is what they're trying to tell you here. All these are like very, very administrative type of sections. Not very, very important, I can say, but it is good to know. So you can just put a summary like this and just run your eyes through a day before the exam. Levy and collection. Who is going to levy GST, UT GST? Who is going to levy? Who is going to collect UT GST? Now say the levy on all what kind of goods and services? On all goods and services except alcoholic liquor for human consumption. They're saying alcoholic liquor for human consumption is not covered under the purview of GST. We have seen that earlier, right? And the rate of GST on the value determined under section 15 of CGST and such rates not exceeding 20% as may be notified by the central government. Means what they're saying is maximum rate for UT GST is 20% in the sense. So the levy of GST cannot exceed more than 20%. We saw earlier that, let's say CGST, we saw the rates as 5%, 12%, 18%, 20%, right? Sorry, 28%. Correct? So this will become double in the sense total rate of GST. This is divided into two parts, CGST and SGST, of 14% plus 14%, right? Now if you are levying UT GST, it will be CGST 14% and UT GST 14%, right? Right now the maximum, currently as of today, the maximum rate is 14%. So they're saying at any time the government cannot increase it to beyond 20%. So that is the cap. Right now it is at 14%. Okay, cap is 20%. So the overall GST rate cannot exceed 40%. Understood? Right now the overall GST rate is maximum capped at 28% current. Anytime the government decides to increase the rates, it cannot increase beyond 40%. So that 40% will have two taxes. We are right? CGST, UT GST, CGST, SGST. Are we good? Yes. Now they're saying right now petroleum crude, motor spirit, high speed diesel, natural gas and ABT are not covered under GST, right? It is not, it is still under the state excise. It is not covered under the purview of GST, but later at any certain point of time they can levy GST on this, correct? Okay, how? On the recommendations of the council. Now all this is again, who is an electronic commerce operator, where should he take registration, and all of that again we'll be studying later in chapter 16. Nothing to worry. What is exemption from GST? Either you can have full exemption of GST, or if you satisfy any certain conditions, then you'll get certain exemptions. Let's say milk is exempt from GST, example. So whoever buys milk will be exempt from GST. But let's say a particular handloom, okay, it does not have a blanket exemption. Only a particular set of suppliers will get exemption if they follow so and so criteria. So there are two types. Either you get full exemption, everybody gets exemption, or you follow certain conditions, only then you'll get exemption. So there are two types of conditions, two types of exemptions, right? Now payment of tax. How do you pay taxes? We discussed earlier that the credit, you can set off the credit of the input taxes against the output taxes. Are we right? So we are saying, so what are the types of taxes we are paying? We are paying CGST, we are paying SGST, and we are paying IGST. So this SGST and UTGST can be considered as one and the same. Okay, they function in the same way, right? So they're saying, see, obviously understand one thing, that if you have something in your hand, you will utilize it for yourself first. Okay, so all these three are selfish. They are going to utilize their own credit for themselves first and then distribute it to others. Okay, so the CGST can be utilized first only for CGST, SGST first for SGST or UTGST, and IGST first for IGST. So first they have to be selfish and they have to utilize it for themselves first and not just distribute it to others. Now SGST cannot be utilized to CGST, and SGST cannot be their enemies. They both can't utilize for each other. Okay, can we see? CGST you can utilize first for CGST and then for IGST. IGST is integrated, right? It's a central tax. It's a tax levied by the central government of India, not specific to any state. So CGST to be utilized for CGST first and then IGST. SGST to be utilized first for SGST and then for IGST. IGST, but see, IGST is like grandfather. You can utilize this credit for everybody, but first you should utilize it for itself. Now you utilize for CGST or SGST in any manner. No preference, any manner you can utilize. Are we right? But CGST and SGST can't be utilized for each other. Alright? You can't utilize that for each other. This is very, very important. They'll give you one question and they'll say, you know, there's so much credit in SGST, so much credit in IGST. What is the balance left after utilization? So you can't utilize one to another. Okay, we will see all these things in the later chapters. Like I said, this chapter is like the whole brief. It's going to give you a whole bird's eye view of all the chapters, and it will touch everything that you're going to study in the syllabus. So don't have to worry if you don't understand at the first instance. No problem, we're going to be covering everything in detail in the further provisions. Here again, I've just simplified this. Please understand that this is very important. Please read this chart and go. Okay, if you just read text like this, it might be a little difficult to kind of visualize. So here IGST for IGST first, and then for CGST or SGST in any manner, then UGST and IGST in any manner. Okay, so again, UTGST and CGST and SGST cannot be utilized for one another. They're like enemies. C and S cannot go together. Okay. Here also again they're saying utilization, order of utilization, same thing they're saying. Now we saw who can be utilized for one another. Now they're talking of order of utilization, same. Here only I covered the order of utilization also for you. First for yourself and then to others. But the center and the state cannot give to each other. Okay, simple. We have repeated it quite a lot of times, so I hope you don't make this mistake. The center and the state cannot give to each other. Whatever tax you have, you're going to utilize it for yourself first. Okay, so moving on to the next section, that is the transitional input tax credit. What is transition? From where did you transition? You transition from the old indirect tax regime to the new direct tax regime, new indirect tax regime, right? So earlier under VAT, CST or any other older taxes, if you held some credit, that is the input tax credit that you paid on the purchases. Let's say you had some credit in your account of 1 lakh rupees. Now you are moving to the new regime. Will you just lapse this? Whatever I paid earlier, it's over. It was because VAT, CST, whatever earlier taxes is no longer existing. Not at all. Whatever is there here in your account as your input tax credit lying in your balance, you can carry this forward and come to GST. That is called the transitional credit that they're talking about. On what would you have paid taxes? You tell me. You would have paid taxes on your inputs, right? Come here. Inputs held in what? Stock. Okay, whatever is your stock in trade, then held in semi-finished goods. Whatever is it, whatever goods, you know, is still getting ready for the sake of sale, semi-finished, or inputs held in stock of finished goods. It could be stock, semi-finished goods or finished goods on the day immediately preceding the appointed day. Appointed day is what? The day you're transitioning to GST. Okay, so if at all you come here to the definitions, I'll show you what is appointed day. I've marked it somewhere. Okay, never mind. In appointed day is the day you're actually making the transition. Okay, here means the date on which the provisions of this act shall come into force. Provisions of which act? Of GST Act is actually going to come into force. So you are carrying that credit from the older GST, older indirect tax regime to the newer indirect tax regime. So please understand, I'm going pretty slow with this chapter because, like I said, it's the first time that you're studying the provisions. I cannot rush on the first chapter. Later, when we get into the specifics of each provision, then you will have a clear idea, and then we will be speeding up our process of our revision. Alright, okay, so what are we talking about? How are you going to transition the input tax credit? Now they're saying whoever had any earlier taxes, you can transitioning it. provided you're utilizing that credit for business purpose. See here, you're making taxable purpose, and he is eligible to claim input tax credit. So in the input tax credit chapter, we'll see who is eligible to claim credit, who is not eligible to claim credit. So they're saying you should come under the category of the one who's eligible. Okay, now we don't need to see it, we'll see it later. Now you should have possession of tax invoice. Whatever this credit you took, right, whatever the input tax credit that you should have bills for all of this. You can't simply take credit. You have to have bills, that is, you have to have invoice or any other document related to that to claim the transition of the taxes, and those bills should not be older than 12 months. Okay, so these are the conditions. Now they're saying if at all some goods, let's say some handloom clothing was earlier exempted and you had paid some taxes earlier, but here in under GST it became taxable. Before it was exempt from taxes, now it has become taxable. There you couldn't claim the credit, right? Because if you're, very simple logic, when you purchase goods and on the output, when you're selling, if you're not paying taxes, it means whatever you paid while purchasing also you can't set it off. Okay, we'll come to this a little later. Please understand, if at all you have paid any taxes on the purchase, and on the sale if you're not paying any taxes, you can't set it off. Simple logic. Okay, so here they're saying earlier it was exempt, now it has become taxable. Now because it is taxable, you can carry forward the credit. Okay, switch over from composition levy. Composition levy is a simple way of taxing registered persons on the basis of one particular single rate. So we'll talk about this in the registrations chapter. Here they're saying you cannot see whoever is going to pay a fixed amount of taxes. A registered person who was either paying at a fixed rate in lieu of the tax payable under previous law, who was registered under composition levy in the previous law, shall be eligible for credit of the taxes held in stock, semi-finished goods and finished goods. Okay, he can transition and bring the credit. Even the composition levy person can transition and bring the credit to the new GST regime, is what they are saying. Again they're saying the same thing. Should be used for taxable supply, should have possession of tax invoice, should not be older than 12 months. Then here he should have invoice, it should be used for taxable supply, should be used for business purpose, and the said registered person is not paying tax under section 10 of the CGST Act. Again we'll come to that a little later. What is advance ruling? Sometimes what happens, so we are on the next section, this is completely different. What is advance ruling? Let's say I have a doubt. They're saying on cotton clothing the GST is exempt, okay, but on some particular kind of cotton clothing which is made from some different kind of fibers, let's say, that is taxable. Example. Now I don't know, as a supplier I'm not sure whether I should tax it or should I take the exemption. I don't know, it's not given clearly. So what do I do whenever I have any questions relating to what? Relating to registration, or should I take registration or not, or relating to any supply or any classification or any, let's say there's some notification issued by the government, I don't know whether it's applicable to me or not. Okay, it is not very clear. So then I go to the authorities and say, give me an advance ruling, give me an answer to my question. So that is your advance ruling. Give me the answers to my doubtful questions. So you can go for advance ruling for any of these, whatever categories they've given. One important testing point here is, can you see determination of time of supply, value of supply, you can go, or both, but not place of supply. So in the question they'll ask you, can advance ruling be taken for place of supply, or which one of the above cannot be applied for advance ruling, right? So place of supply will not come here. But any others, can you see any classification of goods and service, any applicability of any notification, time value, ITC, any liability, you don't know how much to pay, you don't know what is the rate to be applied, you can go ask. You don't know whether you're supposed to get registered or not to get registered, you can go ask. And anything that's related to supply of goods or services, you can definitely ask. Okay, now who is the constitution for authority for advance ruling? So who will you go and ask? Correct. So they are saying the officer of the CGST, officer of the center, and officer of UTGST. Again, like I said earlier, whatever is UTGST means the same for SGST also. Here In this chapter, they are clearly explaining everything about UT GST, but again, it is applicable mutatis mutandis, in the sense it is same applicable to the states as well. Now, they say who is the officer. Officer will be one from the central tax and one from the UT GST or the union territory tax. So this constitution will have one authority and one appellate authority. So they're saying who is the authority. Please understand, authority will have one from CGST and one from UT GST, or if at all, if they're talking of SGST, then one from SGST. Who will be authority, who will constitute appellate authority? Again, MCQ question, exam testing question. Here the commissioner will form. One is chief commissioner of CGST, that is chief commissioner of the center. One more is the commissioner of the UTGST, will form part of the advanced ruling authority. Now, can we understand that we have been telling whatever is applicable to CGST will apply to IGST also, whatever is applicable to CGST will apply to UTGST also, SGST also. So every section relating to supply, composition time, ITC, registration, returns, payment, TDS, assessment, refund, audit, demand, liability, all this, whatever is there in the entire syllabus will be same, in the same way applicable to CGST, SGST also. Let's say you're paying 18%, right? So this is half, this is half, this is 9% CGST and this is 9% SGST, right? Are you going to say I'll apply only to this, I'll not apply to this? Whatever I'm using my judgment, whatever I'm going to pay liability, I'm going to pay only for this and not for this? No, not at all. It'll be the same. Whatever is the same for CGST will be the same for SGST. Okay, so you don't have to separately read the different acts. So the above provisions are applicable to IGST also. Same for IGST. Now, who has the power to make rules? Can we please understand one important thing, that rules and notifications is given by whom? Rules and notifications, excuse me. Rules and notifications is laid out by the central government. Rules and notifications. Regulation is notified by the board, Central Board of Indirect Taxes and Customs. Understood? So this can be a question point, where who will make regulations? Regulation will be made by the board in the sense Central Board of Indirect Taxes and Customs. Who will make rules and notifications? R and N will be made by central government. Now, who will give instructions or directions? If there's any direction, okay, direction to do something, instruction to do something, then the commissioner will have the power to give any directions. Removal of difficulties, if at all there is any confusion, any difficulties. Let's say the government brought out any particular section and then there is some difficulty, people are not able to follow this, they're not able to understand what to do. Then to clarify that, the central government will take recommendations of the GST Council. GST Council is like help giver, okay? It'll always keep suggesting, it'll always keep giving advice, free advice. So whatever the central government does, it is always on the recommendation, always on the advice of the GST Council. So central government, on the recommendation of GST Council, will remove any difficulties in understanding, interpreting any of the notification circular, any of the rules or the notifications that's been issued by the central government. Cool? Okay. So we are done with advanced ruling, we're done with UTGST. Alright, take a deep breath. Yes, we have covered most of the significant portion and we're coming to another big portion, that's the compensation to states. Do you remember I earlier told you, let me give you a whole picture of this and I want you to listen to me and just listen to me for the next 5 minutes. Okay, so you understand the whole brief of the conversation that I'm trying to make. Okay, so I told you the states were crying when the center proposed to bring GST in the country. The state said, oh my god, we are going to lose out on revenue. What if? They knew that the new indirect tax regime is not going to compensate them well enough, in the sense whatever they were actually earning. Example, let's say every state was earning around 100 crores every year, example. Okay, now they understood that when they moved to GST, they will be earning only some 70 crores. So that 30 crores was a loss of revenue. Because of that, you tell me which person would want to lose revenue, right? So they said, no, we are not going to transition to GST. So, but the GST cannot be implemented by all the states have to agree. The whole country has to implement GST. You can't say in Karnataka I'll apply GST, in Haryana I'll not do it, in some other state I'll do it. You can't do that, right? So the center had to convince the states to bring all of them together and say, yes, we agree to the new indirect tax regime. Okay, so they said, okay, chalo, you're worried about your compensation, you're worried about your losses, right? So that whatever difference, a 30 crore loss, whatever you're making, no, every year until the next 5 years ahead, we are going to compensate you. We'll pay the difference. Are you happy? Okay, earlier you were earning 100 crores, now you're earning only 70 crores because of GST. Now, whatever difference is your loss of revenue, we are going to compensate it. So that's why the states happily agreed to, and they said, okay, chalo, we'll agree and come under the whole GST regime. Okay. Now, how are we going to calculate it? So first, we should understand what is the base year. Base year is 17-18, financial year 17-18. In the sense, in that year, GST came into regime. Okay. Now, projected revenue in 18-19, they said every year there's an inflation, there's a growth rate, right? So if first year you're earning 100 crores, second year also doesn't mean you're earning same 100 crores, correct? Are we right? So there's always a growth inflation, right? So they took that growth inflation or that growth rate as 14% example. So they took first base year revenue, and then they took projected revenues for next 5 years. They took base revenue 0.0, and then they took projected revenues for the next 5 years, and then they calculated what are they actually earning every year. So again, in my same example, 100 it was what they were earning earlier, 70 was what they earned because of GST. This 30 they started giving compensation to states in 5 years. Got it? Understood? So this is a very simple thing. How are they going to get so much money, right? Even the central government needs money. So they started levying a cess called the GST compensation cess. Okay, they started levying a cess on all the goods and services called the GST compensation cess. So if you could see in a bill, it could be CGST, SGST plus cess. Cess would be tax on this. Okay, some small portion they would levy as compensation cess, and whatever they earn from this compensation cess, right, this would go to compensation fund account. Okay, so this would go to this fund called, let me show you here, GST compensation fund account. Okay, see here, GST compensation fund account. Here, let me show you. So let's say 100, all the compensation cess used to go to one big ledger account, that is the GST compensation fund account, and from there whatever has to get distributed to the respective states, it would get distributed to that particular respective states. Let's say the difference for Karnataka was 30 crores went to Karnataka. Let's say difference for Tamil Nadu was 45 crores, 45 went to Tamil Nadu. Let's say difference for Delhi was 15 crores, it went to 15, like that. So whatever the states owed, right, so it was paid accordingly to each one of them. Now you tell me, who decided so much is the correct value? Now the states can tell no. Obviously people be greedy, they'll tell no, I own 150 crores, oh no, I own 1000 crores. Can the center just pay? No. So such accounts will be audited by the Comptroller and Auditor General of India. Okay, so he will verify the whole process, whether whatever the states are saying, is it right. He will audit the accounts, he will look after the accounts, and he will certify it. Okay, so this is like the whole story that I'm trying to tell you. It's a long lengthy portion if you read every line by line, but understanding the whole framework helps you to put yourself in a better state. Again, okay, so again, first the center started paying compensation. Okay, how did they calculate? First they were saying base year is assessment financial year 15-16. Sorry, my bad. Financial year 15-16, that is April 1, 2015 to March 31st, 2016, financial year 2015-16. Then they identified how much they got for, here in my example, for that particular base year was 100. Now what is the projected revenue? Projected revenue was, let's say, some 70. And this, how did they do this computation? C and AG would help them do that. What is the difference? This 30 difference, and this difference they would again pay every 2 months to the states. What was the periodicity of the payment? Every 2 months on a provisional basis they would keep paying the states. So this is what the entire section says. Now here they're saying whatever earlier indirect taxes that they were saying, whatever this mandi municipality taxes you had, this local taxes, right, even that will be included. to calculate the earlier revenues. Okay, to calculate this 100, what I'm saying, to calculate the earlier revenues. Now I told you there's this GST compensation fund account, right? Fund. Now after 5 years, all the cess that are collected from the consumers, right? After 5 years, if there is still something left, okay, they paid whatever has to be paid to the states, they paid to all the states. Now there is still some money remaining with that state. What they'll do, they'll equally share it with the center and the states. Okay, here let me say, I have put it clearly to you. Okay, so there was some 100 that was in the compensation fund example. They gave everything to the states and the whole balance is cleared. So this became 70. Now another 30 is remaining. In that 50% will go to Consolidated Fund of India. Consolidated Fund of India is some big large revenue fund of India. Okay, most of the funds go there. You don't have to know anything in detail. So 50% of whatever is remaining after distribution to the states will go to Consolidated Fund of India, and another 50%, that's the whatever is this 15 remaining, will go to pro rata, will get distributed to states. So this Consolidated Fund of India is owned by the central government of India. Like I said earlier, half will go to states, half will go to the center. It's gone here already. Okay, now whatever belongs to state, it will be decided on a pro rata basis. Let's say Karnataka's revenue is more than Kerala's revenues, so deciding on pro rata basis, they will distribute it to all the states. So this is what the whole section talks about. I have given you a very brief of, if you know so much, I think it is more than enough. Okay, all you need to know is only so much. I've touched everything. This is going to be a financial year. Your projected growth rate is going to be 14%. All these are MCQ points. Now what shall not be included in the revenue? In the older revenue, I told you, this 100, what they were earning earlier minus what they are actually earning in the GST regime. What were they earning earlier? All the indirect taxes. What can you not include? You can't include whatever you earned from petroleum, motor spirit, AVT, natural gas. Okay, this you can't include. Whatever you earned, whatever indirect taxes or cess that you earned from petroleum and all these, petroleum, diesel, motor spirit, natural gas, AVT, you can't include in that 100. Why? The reason was because the states earn enormous amount of revenues from these accounts and the center cannot compensate so much. One second, it is not under the purview of GST right now. And entertainment tax, whatever entertainment tax they levy, you can't include that in the base revenues. Okay, do we understand that? That is here. Now the base revenue shall include the amount of tax collected on sale of services by the said state government during the base year in respect of state of Jammu Kashmir. Okay, nothing very. Okay, who will actually audit the accounts? C&AG will audit the accounts. Now again see here, 15, 16 is the base revenue, 1, 2, 3. So we are taking 14%, right? So 1 plus 100 into 1 by 14 to the cap 3. So this is how you compound it, right? So your projected revenue, if your base revenue is 100, after 3 years with a growth rate of 14%, your projected revenue will be 148.1544. So 148.1544 minus 100, this 48 is the compensation that will be paid to the states. Understood? Now difference between projected revenue and actual revenue, right? This is the projected revenue, this is the actual revenue. Now again here also they're talking of chief controller of accounts, actual revenue, net of refunds, etc., etc. I think this is more than enough for you to understand. And if at all the center ends up paying more to the state government than what it really has to pay, then obviously the state will have to give back or refund the excess to the central government back. Now what is this compensation cess? I told you, right? This is a small part of the cess that's collected from the consumers just for the sake of this purpose, only for this purpose. Now such cess will not be levied on composition supplies. Very important. Wherever I made these highlighted, it means it's important, and I request you to highlight the same on your book. Please do it with a pen, please get a highlighter, do anything, or put a stick note, anything that works for you. If I've highlighted, it means you also have to highlight it in your book. Okay, now no cess this cess will not be applicable on the compensation supplies. Compensation supply is a different type of supply, different type of registration, where the registered person will say he'll pay a fixed amount, he'll not take any input tax credit. We'll be talking about this a little later in the revision. Okay, now payment, return and fund, again you have to pay the cess, you have to file it in the return and then apply for any refund if at all you've paid excess. And this I've already told you, if there's any excess funds, what happens? First it will get distributed by the center and the states half. For center it will go to Consolidated Fund of India. For state, again distribution on pro rata basis. Now other provisions relating to cess, if at all you paid cess on your purchases, right, that is your input tax credit on the cess, correct? Are we right? This cess can be utilized for set off only for paying cess only. You can't utilize the cess for paying any taxes under GST, that is CGST, SGST, IGST or UTGST. You can't utilize the credit of the cess. It means whatever you paid earlier, you can't utilize that to set off against the taxes. Cess can be utilized to set off against the cess only, is what they're trying to say. Okay. Now, in respect of compensation to states, who can make rules? Do we understand that rules and notifications are made by the central government? Regulation is made by whom? Yes, you're right. Tell me. Who makes regulations? The board, right? The board, we mean Central Board of Indirect Taxes and Customs. Okay, so they're saying all the rules will be made by central government in respect of refund, levy, collection, etc, etc, etc. So all these are administrative parts. You don't really have to mug up everything. Voila, wow, you're done with the chapter, man. So this was quite a lengthy chapter, right? We agree, lot of new topics, lot of new things to learn, and that is why it took some time. But now that you know the basics, now that you know how the credit is utilized, what are the types of taxes and what kind of cess was applicable and what was there in the earlier regime, what was there in the new regime, further it's going to become easy for us. Okay, moving on, let's see the next chapter now. Take a break of 5 minutes, relax yourself, pause the video. I am going to again say, if at all you need time to understand any particular section, please pause the video, rewind, watch it slowly and then move ahead. You not necessarily you have to match my pace. If at all you feel I'm going slow in any particular section, you can always put it into 1.5x and move ahead, right? Yeah, okay.